I think money got too tight last year. I always think the central banks are endogenous to the whole process. And really they're looking at data that tends to be backward looking. And really they should be forward looking. Markets are forward looking. The Fed and other central bankers tend to be backward looking. So, when you're looking at wage inflation and labour market data, that lags the cycle. You should be looking at monetary metrics, how tight money's getting. And I think with all those hikes into 2018 and the tightening of the balance sheet, you could see if you looked at something like a global M1 money supply measure, that money globally was really very tight and growing at the slowest rate it had been growing since the GFC. So markets then reflected that. You had a bout of volatility, and the Fed thankfully adjusted its path from there on out. I think the interesting question is, where do we go from here? Because they've said they were patient, they're on pause, and they've talked about adjusting the balance sheet if they need to. But frankly, I think they probably need to cut. If I look at global M1, it's basically at recession levels. It makes me quite nervous. And I think we're probably not quite through this bout of volatility yet. And indeed, I'm wondering whether bubbles have burst because money's been too tight. And therefore, I think the Fed needs to cut. And I think another downdraft in markets will push them to do that.